just as this happens, you know that this is a market telling you that it's likely to reverse. This is a possible reversal situation, and after this happens, we're no longer looking for a bullish trade because we're no longer in a bullish trend. If we're trading with the trend, now what we need to see is the market either come up and break this resistance again, like so. I'll move the chart like this, in order to show us we're back in an uptrend, and then we can start buying pullbacks again, or the market to come down and break below this support level. Because at that point, we have what I call a 1, 2, 3 reversal move, and if we break this major support level or major swing, then at that point, this would be considered a downtrend. So that was the bullish examples of this. What we'll do now is go to a different chart, and I'll walk you guys through a bearish example of all this to be sure that you have a complete comprehension of how to read major swing levels and how to read trending markets in the bullish and bearish direction. So let's head to a bearish example of all of this right now. All right, so again, with a bearish trend, it's really easy to spot markets that are doing this and say, okay, that's a bearish trend. But a lot of times markets look more choppy than this, right? This is what a real bearish situation will look like, and it's choppy. You can't really easily point out major swing levels unless you have some type of rule, which is what I've been explaining throughout this entire video, is my rules for major swing levels. So what we're gonna do is start right here with this being our starting point, our first major swing level. With this being a major swing level and this being our previous level of support, where's our impulsive move in? So what we have is a market pushing down, right? Swing high, major swing high, to a major swing low, and once we start pulling back by a few candles, I don't have an objective rule for this again. I normally want to see more than 2 candles and a decent pullback, but again, this is just something that'll come with experience. There's no real objective way to identify a pullback. Again, one of the better rules I have is at least 2 candles, and I want to see some movement. I'm not talking about 2 candles like this. This isn't really a pullback. It's just 2 really little candles before a breakout to the downside. I want to see an actual pullback, and I want to see it consist of at least 2 candles. Would be one of the better ways I have of identifying a pullback objective. So if this was our impulsive move, this is our pullback. What are we waiting for next? We're waiting to see this level of support broken and closed below. Because at that point, one, it solidifies that we are in a downtrend, right? If we have that break, then that is a guaranteed downtrend. If this was a reversal move, this would be our 1, 2, 3 move. And we're now in a downtrend. We know that for a fact. Awesome. We're in a downtrend. And we also need this level to break so that we can classify this as the level that can't break for us to continue in a downtrend. Because once we have a break of this major swing low, we know that this is the top of our pullback. And the top of our pullback, our major swing level, at the top of the pullback is a level that cannot break if we're going to continue in the downtrend. If it does break, then that's showing us a possible reversal. So in our case that we have on the chart, that does not break, and instead we get a continuation down with the market pulling back, making another swing high, major swing high. And the only reason we know that's a major swing high is because we get a push and break below this level right here, our previous major swing low. So at this point, what we know is that we cannot come up and close above our previous major swing high, and we need to close below at some point this level. But if the market was, let's say, I can actually get market replay to work right here, the way we are looking at this in terms of actually placing trades is that we are looking for opportunities to go short or sell the market in anticipation that it goes further down as long as we stay below this level at 1.0851. As long as we stay below that, then we are consistently looking for possible short trades to ride continuation to the downside on this particular bearish trend. See if the play button works now. Not so lucky, so with the power of editing, show you what